This has not happened in an extremely long amount of time. Matter of fact, whoa, what we're seeing right now, this may be your last freaking chance in a very long time from now to get yourself some what we call cheap coins. Now, I'm not actually talking just about coins being lower from where they previously were at, in the sense that if a coin is down $2 from yesterday, now it's cheap, right? Because it's a dip. I'm actually talking a little bit more broadly about where Bitcoin currently stands. And I think it would have actually been quite nice. Let me just actually say it like this. It makes it a little bit easier. All right, I put a couple of freaking little text pieces over it to indicate a little bit in a better form what we're talking about. As it currently stands, I mean, over the past couple of hours, we've moved out of it, but over the past 24 hours, we finally got ourselves a chance to buy Bitcoin at an oversold position. What are we referring to? Well, we are referring to the idea that Bitcoin usually trades above the 50 moving average. It's significantly below that, but it usually also trades at a certain amount of multiples of the 200 moving average. And in this case here, we basically consider Bitcoin to be oversold the moment it steps below that 50% extension of the 200 moving average, which it dipped into just, I'm going to say 20 hours ago or so. And I want you really to look back at Bitcoin's previous price action. Take a look at this orange line right here and see how it moves. Matter of fact, this is kind of a fun fact. The last time that Bitcoin broke below the 50 moving average and touched, or at least got really, really close to 100 moving average, it made a pretty crazy resurgence over the next, I'm going to say 2 months or so, up 51% throughout that time. And fun fact, some of y'all were wondering, well, could you actually trade below this 50 moving average and below the 100 moving average and have a, bad time afterwards? It's been 50-50. I'm going to call it, in the recent history here, there's 2 times this happened, right? The first time it happened, at least in the last 5 years or 6 years here, was when Bitcoin broke down all of a sudden in the COVID situation, right? We fell below the 50, fell below the 100, made a very, very steep bottom. And the moment it recovered above the 100, the moment it recovered above the 200, that was when we saw the surge of 2021, right? So this basically happened in, I'm going to call it neutral territory that turned out to be the bear market though. But you can see, right, this move here is what we often consider to be the worst move in crypto ever. If you had, however, bought into that fear, specifically the moment it went below the 100 moving average, sure, you would have had about, I'm going to say 3 or 4, maybe 5 weeks of misery. You would have not loved your life as we went down like 50%. But pretty quickly afterwards, you see just how crazy the price went, with thousands of percent of gains. From that bottom, it went up, let's say 2,000% or so over the next couple hundred days. Then a second time it happened was actually in what, again, we consider to be the bear market. This time it lasted a significant amount longer and actually ended up going below the 200 moving average as well. Again, from the moment it fell below the 100, you can see it never climbed, whatever, back up. And that's, again, the key. Closing below the 100 moving average is significantly less desirable rather than touching it or getting below there. However, again, there's also a difference, at least as we can see right now, between having a single close and recovering versus having a close plus confirmation like we had back here in the quote-unquote, worst part. What we did see, however, is actually the moment that it broke below the 100 moving average, which is the yellow line, the moment that it decided to break above it again, the initial moment, is actually when we saw the next bull run start. Because that was here on October 2023. I'm going to say the bull run started officially in November of 2022, right, with the new run up. But this is basically where the massive impulse came, the moment that it broke below, above multiple here moving averages. Anyway, so the point being, if you take a look at relative prices, especially if you look back at how Bitcoin and these cryptocurrency prices have acted throughout history, one thing I think becomes quite apparent is that relatively, and this is the same video I've been making a couple of times here right now, relatively, if we're looking at these crypto prices, this is extremely cheap. Right now, in this whole area between, let's call it 83,000 to about 110,000, this is neutral territory. This is basically where Bitcoin's price should be, or normally trading at. Slightly above it, again, depending on how fast the price goes, you could consider this overbought. You could consider this to be slightly too high at the time. And that's, again, based on how quickly Bitcoin moves up. Because once more, the average is the average over 200 days, right? This number actually also continues to go up if Bitcoin's prices go up. making sure that this overbought area does not always stay overbought. Matter of fact, over time, it gets to neutral or perhaps even oversold, depending again on how long Bitcoin's prices stay up or how severely they go up in a short amount of time. Now, just for fun, I want to quickly show you some of my older charts here that we've been talking about on the channel over the years. Chart from 2024, fun fact. There was so much talk about whether or not to buy Bitcoin, yes or no, and here's the area we sculpted out that we're going to buy Bitcoin at, which turned out to be a good idea. Fun fact, this is $39,000 at BTC from last year. I just want you guys to realize for a second the discussions we're always having. And again, we bought in this area. Actually, it looked pretty bad because the price went down a few percent more, but ended up being a really, really good area to buy. And again, we basically said that this is the area to buy, 39,000, and we get scared if it breaks below 37.5, but luckily it did not. Now that's again one chart. To put into perspective, even here at 30,000 and stuff like that, we were worried about Bitcoin falling down further. Another time here, this is actually 2022. Fun fact, we are drawing in all these things throughout this period as well. Remember and realize that we, if you've been around the channel for a while, we're scared about Bitcoin here at $16,000. And again, we basically talked about the last line of defense. Turned out to be a pretty good idea. But I want you to remember that from this level, Bitcoin basically pulled, let's call it an 8x, or let's call it a 6x to make it simple here. But at the time, you could not really see it. Matter of fact, every single day you looked at the market probably around this time, you thought, oh, damn, this is looking bad. This is looking bad. And so it goes again. A little fun fact. We drew in a little, this is like what a couple of those, let's call them famous creators were doing at the time. A little cup and handle where you draw a cup in and after the handle, you get a crazy breakout. Didn't actually work perfectly, right? Well, if you look at this cup, right? This ended up at around March of 2024. So this is, again, about a year and a half ago. I'm going to say almost 2 years ago since we started this idea. And we said, then afterwards, price go up like crazy. It turned out that little cup was significantly longer. You know, we drew it in for roughly, let's say, 112 days or so. If we had only drawn this a little bit longer to extend, let's say, 180 or 190 days, right? So we basically just made it a little bit, okay, I can't, but, you know, a little bit bigger. It turns out that this upwards move, though, actually turned out to be pretty freaking accurate. And that's, again, the funny thing, what I see right now in the charts as well, that even though there is some chance of falling down lower from almost any angle, how much lower, and this is going to sound kind of stupid to some, but how much lower can we go before it just gets ridiculous? And the only thing that I think could play a significant role is something that you can't really predict just quite yet, you know, a political thing, another Trump statement, or something were to happen on the MicroStrategy front. Right now, for example, what's being said is this. Bitcoin has been tracking MicroStrategy throughout the entirety of the move down. That means we could retest the critical $75,000 or $76,000 zone. If we were to follow along like we've been doing previously, we actually have significantly lower lows to go for BTC. However, I would not say this is too far similar because, again, this dip right here and actually the way the progressive highs, it looks like a completely different chart to me. It is similar, sure, but just because they were similar in good times and now partially similar in bad times doesn't mean the one will, by definition, drag the other one down. Again, moving similarly, even if it were to end right here, I would still consider this to be almost perfectly in line. But understand that for Bitcoin to get to a similar sort of level as MicroStrategy, we're not talking about $70,000 at BTC. We're talking basically about way lower, not just because of these previous tops, right? But more so because you got to understand, this is for MicroStrategy, significantly lower low that it's making after a very lackluster higher high, you know, almost non-existent, almost a double top right here. This is way more bearish than with Bitcoin. Even if it were to get towards, you know, $75,000, so this would still look way better for Bitcoin than it does for MicroStrategy. Anyway, I do also want to remind y'all that this is a Sunday, and Sunday is, well, at least out of the week, the best day for Bitcoin. So I am warning people that even though we are above $88,000 or $87,000 at the time, and we are not, again, in the cheapest of states, perhaps you get back there. But now, again, today should mark another spot where you realize, you know, on the short term, things may not look its best. And again, I understand a lot of people don't want to catch falling knives, but understand that even if we were to fall like crazy right now, I see it more as a chance. I see it more as a good opportunity because relatively to wherever we've been at for the past couple of months or perhaps years, this is, again, the first time in a long time where things are looking good. Again, what did I say myself? I'm buying Bitcoin at $81,000. We got ourselves that buy in. And, well, that's basically the only buy that I've set. Where, again, will I start buying? Well, most likely Bitcoin makes a really far stretch downwards. Again, I personally have my eyes on $78,000 where I'm thinking of scooping some up. But you can understand, maybe it's nice to look at previous tops. Where did Bitcoin previously top out at? Maybe $71,000 or so. Let's again start accumulating at those levels. Or rather, where did Bitcoin make a solid bottom at? What we can see right here, right? Roughly 78,000. That's my first buy. Then again, perhaps a secondary chunk buying at 71,000. Why is there so much gap in the middle? Well, because if we're actually falling like crazy and you're trying to catch that falling knife, you don't want to set too many buys too close because there's a chance it's going to blast through every single one of them and go $15,000 lower in just minutes, let's say, right? Just like on the 10th of the 10th. So it's, in my opinion, wiser in times of massive amounts of panic or massive capitulation to have your buys be more stretched out. Having said that, if we're taking a look at the capitulation numbers we are seeing right now, right, in this part of the market, this is indicated here over in the red, you can see just how crazy it is right now. And usually, if you take a look at these metrics, it's not every single time, but it marks a local bottom, right? You can see here the metric spiked, local bottom, metric spiked, local bottom, metric spiked, local bottom, metric spiked, local bottom, metric spiked, local bottom. Right now, I'm going to guesstimate the same thing again, that we are in too much fear. Relatively, things are moving down too hard, too fast. And even though, again, I'm not telling you guys that the altcoin season is safe, the bull run is continuing on, I'm saying when you get the chance with these relative prices, it's not a bad RR, risk reward, to try take them. Once more, I will remind you, this is a Sunday. Sunday is the best day of the week. Tuesday turns out to be one of the worst days, with Thursday being absolute worst. I'm not saying the run has been saved. Nor am I saying that buying right now at 88,000 is nice. Matter of fact, my whole spiel here, my whole video, is talking about the idea that if we right now go back to 83 below, these are again nice areas to start the accumulation. If you're thinking of buying right here, let me ask you one very solid question. Why? This, everywhere, let's call it, between 110 and 83,000 is all just a fair value. This is again for the people that want a DCA, just averagely buy. They don't necessarily need a good deal, they just want an average price. There's two lines of thinking. One is you're actually buying right now at 88 because the market bounced back and you think this is now enough of a bounce to warrant more price movement since the trends have shifted. Some others will say, well, this is just a very big discount from 126. 88 is within margin for neutral purchases. I prefer to be more towards the bottom of the neutral range than the top. Another person would say no, because actually we did not get enough confirmation yet. Sure, it's a good discount from the top, but it's only a few percent from the bottom. This is not enough confirmation. I want it to be, for example, above the 50 moving average at $100,000 before I'm certain again. So they prefer this upper echelon of neutral, where again, they perhaps are looking for sales in the altcoin season area, for example, $140,000 plus a Bitcoin. But this is all relative. This is all according to your own preference. So this, not really a video I usually make, right? This type of stuff is not something I talk about every single day. And I'll quickly say, if you've not pressed that like button yet, make sure you press that button. Or if you're looking for a platform to trade on, I personally trade over on Bluefin. A link for that is down below as well. And right now you get yourself a pretty nice sign up and deposit bonus. So you can check it out. You can actually get yourself upwards of $10,000 for just trading. Literally no real requirement. It's completely free, obviously. Just trade and you get yourself a Rolex if you trade a lot, which again is nice because you're trading anyway. So it's just free stuff. This is not a bonus, by the way. You actually get just free schmeckles. I always like to call it schmeckles. The first one, if you trade very, very little, this is a bonus, meaning you can't really do too much with it. The rest is just for you. Anyway, to get back to the story, I am more so on the side of, well, whenever we get a good-ass deal, we go hard. And if we're in the middle right now, for example, at 87,000, this is, again, normal accumulation like I always do, with a slight bias to not go too crazy, purely because of the carnage which we've seen just now, and realizing it's a Sunday. Right? So again, my bias here is to be cautious, but this is like a normal average day, normal average prices where I'm just comfortable accumulating more because these are good prices relatively, but it's not as good a deal. It's not a fire sale where I have to hurry to my laptop to buy like a freaking maniac because it's just really, really oversold in a really good spot. Again, where my next buy is going to be, I'm thinking of accumulating, well, every single time it goes below 83,000 basically. 81 in this case felt like a good price. Nothing really too crazy to hang on there, but 81 felt like the price for me. Worked out pretty nicely. Well, next price again is 78. I think, again, nice to start accumulating at that level. And just below that, I would, again, personally start adding at 72. This is, again, if the market does decide to break. I still hope not. Because realistically, even though I like myself a good deal for the long term, I think this was enough of a shock for the people. However, crypto's the Wild West. You never know what's going to happen next. Maybe tomorrow, a new story will be spun up about how MicroStrategy is going to zero. and it's going to have a massive impact on the market. But again, like I said 1,000 times, all the main reasons the market went down, I don't think are that valid no more. I'm putting my money where my mouth is. I'm buying these freaking coins like there's no tomorrow. Well, I guess since I'm being kind of okay right here at these prices, there is kind of like a tomorrow, and I've already stacked my bags. But here, this is my theory. This is always what I hold on to in the back end. You don't really notice this too much when I'm making my normal videos, but this is like my line of thinking in the broader scale of things. Where is Bitcoin trading at relatively to where I think it should be trading at, or where I think is like, let's call it fair value versus overbought or oversold again. The fair value where buying and selling both is really understood, but my bias is again towards buying because I'm a long-term bull, is again right now, this will change every week or every month between 82, 83, and 110,000. This is just, I'm indecisive, right? Everything below that, I'm really inclined to just buy regardless of market conditions, and everything above it, me personally, I'm not that motivated to sell, but this is the area where things get scary, where again, the oversold or cheap area is where things get really, really scary from a missing out perspective, FOMO, and just the idea of, well, it gets really cheap right here. This is the opportunistic phase. This is, again, neither. And this is, again, the opportunistic phase to sell your coins and get yourself a nice entry. Again, hopefully a neutral or hopefully an oversold, which, again, does not always happen. Sometimes you instantly go to altcoin season and things just spiral out of control. But this is, again, where things get riskier and scarier rather than easier. And, again, more towards the bottom is where, theoretically speaking, things get, I'm going to call them nicer, right? Looking like a better deal, like a better snack. But yeah, that's about it for my thoughts. Hopefully, you guys agree or think with me here, or you have some comments. Let me know down below. That was it for this little crypto update.